Hey traders, good afternoon. This is Christian Fromhertz, CEO of Tribeca Trade Group with your end of day recap for Wednesday, Fed Day. And a lot of different implications today. We'll go over those in detail. I always secretly I like Fed Day because things are always moving all over the place. We get a lot of separation between sectors. You always have interest rate implications, implications with gold, implications with the dollar. All of these things are moving all over the place. That which coupled today with some a bit weaker than expected and a bit weaker than expected U.S. economics, and that actually had a bit more effects than the Fed did, except for maybe technology. But this morning we had an inflation that came in a little bit less than expectations, negative zero point 0.1 month over month. So just to kind of highlight this data, both retail sales and CPI were weaker than expected, but it wasn't a huge miss. And I thought there was a little bit of an overreaction to this data this morning, especially when you couple last month's revised retail sales up a tick versus this month's, which were down about 0.2 of a percentage point. So when you look at the 2 months together, it's almost a flat, month over month. Maybe the market was expecting a little bit more, but all in all, the numbers purely were not a bomb of a numbers, but nevertheless, we saw bonds really get a huge bid today, and a couple other areas, and the bonds moving up caused the rates moving down gave a real lift to the home builders. So first of all, let's go over the major indices. Really nothing to jump up and down about in either direction in S&P. Kind of a choppy day. We were down about 10 basis points for the majority of the day. We broke down after the Janet Yellen was testifying today, and then we kind of came back once, which is always the case. Once she's done speaking, then the VIX starts to go down and the market starts to recover if it's sold off. So this is a very traditional move. Same thing with small caps. IWM. IWM was basically down all day today, and kind of suffering a little bit, underperforming. And they went lower by about 15, 20 basis points, and they finished basically where they were before the Fed. So both S&P and IWM finished almost exactly where they were before the Fed meeting. So really no noticeable change there. And the one thing that was different, so kind of alluding to the Qs, because the Qs were outperforming today. They actually tried to get going. We're never able to really take out the pre-market high in the Qs, and then they completely crumbled. And they kind of got hit pretty hard. So they did come back end of day, but it just looks like we're not out of the doghouse yet with the Qs. So there may be a little bit more pain ahead in the Qs, or at least some underperformance versus everything else. Why I've got this red line drawn here, because if we go to the daily chart, it's kind of the line in the sand, and I would be a little bit careful with this. So I'll give you a level to watch. That's 139. 139.11. That's the top of the value area. So that's, again, what the value area is where all the majority of the volume that took place in the last trading period. So in the last month, which is on the daily chart. So these will really act as good support and resistance levels. So this support level we got into in the beginning of the week and we reclaimed it, great, but it looks like we were not able to get over the short-term moving averages. If we would have closed inside value, I would have said uh-oh, this is a pretty bearish looking sign for the short term. So we hung above it, and we're kind of in no man's land right now. So I don't really want to make a conclusion either way about the Qs. I would rather let them do what they're going to do, and then we have maybe a trade either to the short side or to the positive side. Secretly, I hope it's to the bullish side, but let's let the price action confirm. But right now, we're stuck in the middle. And this needs to resolve itself one way or another. Either we continue to move back up, or we fall, and maybe we fall down to the 50-day moving average, which is the purple line. So to be continued. A couple other areas in tech that I noticed. The semis have not really been able to reclaim the top of value, so they look a little bit weaker. And again, they were more overbought. going into last week. So these, I think, eventually will, again, I'm making a little bit of a prediction here, but I think they resolve themselves to the upside. I think there's too many interesting things going on in the semiconductors, but maybe they're going to pause here and consolidate for a little bit longer, which is also fine. Where I would watch the SMH is above 85.71. That would be a buy signal until we get out of this chop. We're in no man's land, I think, with semis as well. Same thing with XLK, also in no man's land until we can get above 56.36. Or so we're caught in between we're inside the value area, caught in between the top of value, bottom of value, and 50-day moving average, not reclaiming these two moving averages. Very similar to the Qs. So that's the bad, or that's kind of the negative of the day. I'll go right to the positive now. Home builders. Man, we've seen this is the ITB. We talked about this yesterday. So I've been all over this move in the home builders breaking out here. I've been long ITB for the last couple months, and now finally was able to take some nice hit some nice profit targets in this one. If you remember, and I may have talked about this in last night's video, but there was a ton of January call buying in this home building ETF. Again, it's called the home construction ETF, but it's got 60% home builders versus like 30% home builders and XHB. So this is really the home building ETF. So really, and a lot of the charts kind of look this way. We saw repeat calls go up in PHM and Pulte. So Pulte actually came off the highs pretty well, but yesterday we saw calls. Today we saw calls as well in Pulte. Lennar, we saw calls last week, and we also saw some Toll Brother calls today. If you remember, Toll, as I mentioned in last night's video, Toll had really good earnings, and I thought this thing would resolve itself to the upside, and it sure has. Didn't really make sense to me why this was moving down after earnings, after they said that it was the best market that they've seen in years, coming from the Toll Brothers conference call. So that was by far and away the best performing group. And man, we hit the nail on the head. Home Depot, we got long Home Depot a few days ago. I actually had to restructure the trade. I originally got into this trade back here, thinking that it was going to move up, and it actually fell down. So I added to the position. I restructured it a little bit to work. And then blast off today. So really, really nice trade that I put on, considering that I added to it down here. I just didn't think that this close of the 50-day moving average, if we would have had one more day below it, I would have gotten out of the trade. So I got the bid back. Yesterday I was talking about, hey, needed to get into value. So I'm now 8 out of 85% of that trade. And now I'm just messing with profits. So I love to be in that situation. I'll play that game all day long. Also, you're almost getting an MACD crossover. I would watch out for that. And maybe a move higher to 52-week highs. We'll see if that happens. So I've got my little position on, remaining position on for that. Financials were one of the weakest sectors in the beginning of the day. You could see we actually got down to 24.15, and it moved back to 25.51. So this move is intact. A little bit of a hawkish Fed today, talking about reducing the balance sheet, talking about the path of interest rate increases in 2018 next year. I think they said that they want to do several. Of course, keep on the pace that they're at for 2018. These are all things that are probably good for the banks. So move up towards the end of the day. XLF almost finished on the high of the day. The best performer out of the money centers was Goldman, and Goldman was really where we saw the call activity today. We saw both pre and post Fed a little bit of Goldman call buying. We actually played this today in the trading room today, so we had some nice success with that one. We'll talk about a couple other things here. Also, the insurers. So if you look at the KIE ETF, this thing's breaking out as well. So another strong area. Biotech continued with yesterday's strong performance. Didn't exactly close on the highs, but getting really close to seeing if XBI can actually break out here. Notice that I've got that dotted line, which is where we've kind of gotten to a couple times here and failed. So we'll see. This is now, 1, 2, 3, 4, 5 times we've been here. Let's see what we're going to do here in biotech. Could it be the next next sector to break out. I mentioned in yesterday's video, there's been almost a different sector every day that's been making 52-week highs. So don't listen. I keep saying don't listen to financial media because they're not getting it. You can't really have a big turn in the market if there's a different group that's making a 52-week high almost every day. We talked about home builders yesterday. We talked about a couple of days ago material stocks, XLB making a 52-week high. We talked about industrials about a week ago making a 52-week high. I really don't know, other than maybe tech really getting hit really hard, what's going to really change, or what's really going to captivate people who are bearish or sitting on the sidelines. But I just don't think you could really change your consent, your view, if different groups one by one are making 52-week highs. That's not bearish. So eventually things will probably turn, and we will get a correction, but I don't know. You can't come up with a better bullish stance than seeing a different group break out every other day. It's really been tremendous. I even said yesterday, this is a stock picker's paradise right now, because it just goes from one group to the next that's breaking out. So, are there going to be certain things like tech that take a rest? Sure, they can't all go up all the time. Just to look at some of the underperformers of the day, gold made a big reversal today. Gold was up about 1% today and finished down 43 basis points today. So big fake out in gold today. We actually had a nice Fed trade on today in GDX. Had GDX puts on. Really nice trade today. And then last, we'll look at bonds. Bonds were really, really strong today. So they actually broke out and have been moving above, a little bit of, since they broke this area, this dotted line, and broke out of above the 200-day moving average, which is this white line, a little bit of a move back, and then blast off today. So found some nice support here. So bonds look like they want to move higher here. So that's it. That's it for today's recap. Thanks for watching. I didn't really go over any of the FANG stocks because, again, that's not where the momentum is. So, we could call out levels all day long and mention the FANG stocks and what they're doing and so forth. But there are just better places to play right now. They'll pick up again. I'm sure they'll make new highs. But right now, there's more exciting things to talk about. So I'm not going to micromanage and look at every level in the FANG stocks, because there's better things going on. So that's tonight's video. Have a great night.